a very interesting management. Usually we don't hear from Hikal that much, and therefore it's an absolute delight to welcome in Sameer Hiremath. He's the Managing Director and Chairman and Managing Director of Hikal. He joins us right now on the show. Mr. Hiremath, I hope I'm pronouncing your name correctly, sir. Mr. Hiremath, can you hear me?
Hello, I can't hear you.
Okay, I think we'll just try and get that patch. Now, viewers, just keep in mind that amongst other things, when Hikal did their con call in May, they spoke about how while the year gone by was a year of strategic recalibration and focused execution, they were hoping or they were believing that the pharma industry globally was positioned for renewed momentum and growth with a steady recovery all through 2025. And they mentioned, I think one of the things that came out of the call was also that crop protection continued to face significant headwinds, notably competitive pricing from China and strategic shifts amongst the innovator customers, and the management expected stabilization or stability by FY26 and 27 coming up. So I think those are some of the key things that came out from that call.
Yeah, and it'll be interesting because when you're looking at the numbers as well, we've seen very little movement on that top line number over the last 3 years as well. So really, is FY26 going to be that year in which you see a bit of an inflection? Will be interesting to see. And also, it's a company which has exposure within that CDMO basket.
Yes.
What does tariffs do? What does this mean from a business perspective within CDMO? Can margins improve materially? And they have 13 to 14 products as well. So, okay, Sameer Hiremath joining us, Vice Chairman, Managing Director at Hikal. Welcome, sir. I hope we're pronouncing your name right.
That's perfect. Thank you.
Perfect. Okay. So, let me first start off by understanding what the FY26 broader outlook is looking like versus an FY25. Are there, what are the trends at the moment and what are the expectations you have?
Well, FY26, I think there's lots happened in the last few months at the geopolitical level, which all of us are aware of. But I think India, I just heard you talking about the tariffs issue. And, that's been a big question everybody's having. How will India pan out and how will Indian companies benefit from or get affected by that? I think India will stand out to be a winner this whole tariff game. And pharmaceutical companies specifically, who have been in business for a long time, stand to benefit with more and more outsourcing likely to come to India.
Okay. So that's with regard to, of course, exports. But how's the overall market evolving, both even on the crop side? Because that's where there's been a bit of a headwind. Do you see some of those headwinds easing, and therefore what's the kind of growth that you're expecting for FY26 in terms of top line?
Well, if you take the crop protection industry, as you know, has gone through a major downward cycle.
Yes.
Because of inventory corrections and whatever conversation we've had with our customers, that they all feel that the cycle is coming towards an end and the inventory destocking is almost done. Our demand is robust and coming back in certain markets, and I think the crop protection industry will start seeing growth in the next few quarters going forward.
Mr. Hiremath, I hope you can hear me. This is Neeraj here. Good afternoon. When I went through some of the excerpts of your con call, you are candid enough to talk about the fact that it has been challenging and there will be a steady recovery. And I believe you've mentioned that the peak performance that Hikal had put in will probably take 2-3 years to come in. But at the same breath, you also mentioned that the recovery could be well back-ended, as opposed to it being a linear recovery. So therefore, could FY26 as well be a year of consolidation before maybe breakout, if you can, or if you will, happens in FY27?
Yeah, so we have two segments, as you put up a chart just earlier, pharma and crop. Well, the crop industry will take a couple of more years to come back to the post-COVID type of levels. But the pharma business of ours will continue to grow, which I also spoke about in the investor call last month. So we expect the pharma industry to grow, business for us to grow quite rapidly, going forward with our new launches in the CDMO space, as well as increased demand for our generic products, and which is expected to fuel our growth from a medium to long term going forward.
Rapidly, you mean in FY26 itself, right? I presume.
Well, pharma will grow, yeah, it will grow faster than historical averages because the CDMO business is gaining traction and momentum.
Got it.
And
Okay.
we expect a lot of inquiries, a lot of products which we're already developing, which will get launched in the next coming years and coming quarters, yeah.
Okay. And I would want to dwell a bit upon the capacities as well in a bit, but just a follow-up here. Just yesterday, Donald Trump has said that pharma tariffs are coming soon. Now, my question is, I know it's unpredictable, but let's assume that there is some bit of a higher tariff regime that we embark upon or we face in a few weeks from now. Does it impact your business as well, or would it impact specific end exporter businesses from India?
Well, we are in the API business, as you know, and API capacity is not prevalent in the North American market, right? It's more on the formulation side. So I think even if tariffs come, it will differential, and India will stand to benefit Indian companies compared to being in another geography, which could be impacted with higher tariffs.
Mr. Hiremath, where we're coming from, perhaps is, will that lead to any bit of margin compression, or will pricing power be with Indian companies?
Well, only time will tell, but we don't expect any significant impact on the business because everybody's waiting and watching about what the tariffs will be, how much they'll absorb, how much they'll pass on to the patient. So only time will tell. Yeah.
And sir, wanting to also understand what's the scope for margin upside in FY26, if at all. You're suggesting that crop will still take maybe 2 to 3 quarters to recover. So likely towards the fag end FY26 or maybe FY27. Is there at all any possibility of margin upside this year round?
Yeah, again, we have to look at our company in two different businesses, two businesses that we have. The pharma business will definitely show a margin upside compared to last year. Crop, there is still a bit of a few more quarters to go. Towards the end of this year, early next year, we expect to start seeing momentum, revenues and margins start expanding.
Okay. Okay, Mr. Hiremath, now I dial back to the capacity question, right?
Yes.
One, just a clarity. I did ask you whether you believe that in the pharma space, does it start showing in the numbers in FY26 itself, to which you said a few quarters. So does it mean that the quarters come in post FY26, or does it happen in FY26 itself? Just that one clarity.
No, we expect that some improvement in the second half of the year. The NCs that we have are going to get launched and the margin expansion will start, but the real benefit will come in FY27-28.
Okay, I get the drift. Okay, now on capacities, almost every peer of yours who's in the CDMO space that we speak to, post-results or pre-results, is very constructive on the kind of growth run rate that comes in the near term and over the medium term, and the capacities that therefore they are putting in. So everybody's trying to become larger than what they were, right? My question to you is, how are you charting that course from what your current capacities are to what gets on stream in the next couple of years to maybe longer term plans, if you can dwell upon it for a moment?
Yeah, so we also, ours is we have to put in capacity. So we're investing a significant amount of capacity in the next 2 to 3 years. We've already got construction already started on new plants. We're commissioning some plants by end of this calendar year. Some new plants construction will also be starting by middle of this year, which we just got some approvals from some customers. So as we going forward, we'll be significantly increasing our capacity to cater to our demand from our customers and the new opportunities that we're getting, new businesses that we're acquiring.
Okay. Now, a couple of things. I mean, one of the things that we called you for was this API unit clearing the Brazil GMP, right? Now, how significant is this for you?
Well, Latin America is a market that we've started looking at a few years ago. And now we've also seen that there's a lot of potential for all our APIs. And this inspection was a very successful inspection and audit that we had from the Latin American Brazilian authorities. Brazil is a very large market, and this also caters to the Latin American countries apart from Brazil. And for us, we believe it could be a significant part of our portfolio going forward the next 3 to 4 years.
No, sorry. So could you kind of tell us a bit about it in detail? I mean, what is the estimated market opportunity in Brazil for these approved APIs that you have,
Sure,
right? And what are
sure.
the immediate plans for leveraging this approval?
Sure. So just to give you some numbers, my
Please.
team is giving Brazilian pharma market according to the data I have is about 20 billion US dollars.
Okay.
That's only Brazil. The products that we have got approvals for have an end market of over $1 billion. Now that's a formulated value. But even if you take the API value, these are all generics, mostly generic driven market. It's pretty significant potential for generic products. So we've got a multiple range of products that we're launching in Brazil. Plus, we are also developing some products which we launch every year. So Brazil could be a pretty significant opportunity for us, and we expect a lot of approvals to come in from our new customers in Brazil and LATAM, and the market will only grow. I think we expect to have, double-digit growth in Brazil on a CAGR basis over the next 3 to 5 years.
FY26, I presume, or starting FY27.
Starting FY27, FY26, we see some. It takes approvals have already started, sampling has already started,
Okay,
and this only adds momentum to the whole exercise.
got it.
And how large, sir, from perspective is the Brazil market for you in terms of revenue composition? How much does it contribute?
Currently, it's a very small part of our business. It's in single-digit percentages as a total, but it could become significant, mid-teens to double digits, high teens in the next few years.
And sir, with regard to your revenue mix, CDMO versus other, how does that shift? Because that will also indicate to us as to where growth pockets are lying for you.
No, see, it's almost 50-50, maybe percentage here and there, up and down between CDMO and own products. Both are growing. Our own product strategy is to enter markets like LATAM and Brazil and other markets. And the CDMO space, our pipeline is pretty robust, which we spoke about in the investor call as well, which I think you alluded to earlier. So we have a robust pipeline of CDMO projects under phase 2 and phase 3, which are being launched. So we expect the moment split to maybe be in the similar range, maybe a little bit up and down, but both parts of the business will grow.
A couple of questions on the balance sheet, because you're also doing capex and 200 crore of that. How does the balance sheet therefore evolve in terms of debt? How does that kind of phase in?
Well, our debt equity ratio is coming down every year. It's quite comfortable.
Correct.
And we don't see any concerns with that. We've got enough cash flows to manage our capex, but our total debt profile is remaining well within control. We don't see any concerns on that.
Internal accruals, I'd assume.
Yes, that's right.
Okay.
One question on this the OAI status for the for your facility, right? Bangalore facility.
Right.
Now, what's the
Yes.
update there? As of May, there was no update, but is there any further update?
Well, we just got the status last few weeks ago from the US FDA. So we're working with them. We're in dialogue with them to sort out the CAPAs, and we hope to get resolution quickly on that matter.
Yeah, but obviously, I mean, with these things, I'm guessing timelines are difficult to give. Or do you have a timeline in mind?
Yeah, it is, but I'm quite confident we hopefully be able to sort out this issue quite quickly.
Okay. Mr. Hiremath, just coming back to one final question from mine at least, and just trying to understand when, and there is obviously a bit of business confidence and a bit of hope here when you, in your con call, say that from where you were in FY25 on the numbers, to go to peak FY21 or 22 numbers, you probably take 2-3 years, right, on the bottom line. I'm guessing there's a bit of business confidence, a bit of hope here. What is that construct, therefore, on the operational metrics? Do you improve those significantly in the next 2-3 years as well? Because that's a metric that the market would love to track. Your margins in FY25 versus what you anticipate them to be in, like, say, FY27 or 28.
Yeah. I mean, EBITDA margins will definitely increase, in the next 2 to 3 years as we get operational leverage and we also move towards more high margin products. Our CDMO basket, which is growing, is built with more high margin molecules. Our older legacy products is becoming a smaller percentage of our total growth. And the growth will also come from the own new generics, from new generation complex generics that we're launching in global markets. So we see the margin expanding because of that.
Will it be 20% plus, Mr. Hiremath?
Yeah, I think so. Quite a bit more than 20%.
Okay. Okay. And how quickly? Will it be FY26, 20% plus?
No, I think it'll take 2-3 years. I gave that guidance in the
Sure,
investor
sure,
call as
sure.
well.
Anything on the animal health, sir? Is there some positive sign in terms of new client wins globally? Anything that you can give us on that count and how that is going to aid your overall metrics?
Well, animal health is we're counting as part of our CDMO business, because that's all
Fair.
NCE, CDMO work.
Fair.
And that's moving along as per plan. And in fact, we have onboarded several new clients based on the big contract that we signed a few years ago. And that's made a lot of positive momentum in the industry. And we are seeing a lot of opportunities in the animal health space as well. We're onboarding new customers. And that will be a significant part of our business in the next 3 to 4 years.
Okay. Sir, we'll let you go on that.
No, just one
Okay,
question. Sorry, just before you do everything else, something that we ask every company, right? Cash flows are great and everything is, I'm sure, looking solid. Would you need to raise any kind of equity capital in the next 6 to 12 months to fund your expansions?
No, I don't think. I think we're quite significant.
Okay, now we'll definitely let you go. But thank you,
Okay,
Mr.
thank
Hiremath.
you.
Thank you. Much
Thank you.
appreciate
Have
your
a good day.
time.
Thanks a lot.